We are live.
Hello, everyone, and welcome to Stock Talk episode 22, live show with Daniel Pronk and Jake Ruth, where we talk about recent earnings reports, what we're seeing in the market, anything related to stocks. As many of you know, Daniel is across the world in Asia right now, so it's nighttime for him. Oh, he just did we just all moved. Anyways, and I'm from New York. Daniel, how are you doing? I think you just ran back from a dinner. We're a few minutes late, but excited to be with everyone this morning.
Yeah, I'm doing good. I literally got back from dinner and then fired up the live stream. So, yeah, it's interesting managing time while you're across the world like this, but we're making it work.
Also, I feel like we're so zoomed into everyone, but good morning to everyone in the chat who's saying good morning. And again, apologies for being a bit late. So we should just hop into Robinhood earnings. Have you had a chance to go through these, Daniel?
I've not.
Well, this will be fun. So I went through their earnings last night, and there is no shortage of things to talk about here. So let's hop right into it.
All right.
Sharing my screen quick. Good morning, Pedro. Good morning, Kevin. It's great to see you too. All right, so many of you know what Robinhood is. Robinhood is a brokerage platform. One of the things they're most well known for is having a lot of credit for brokerage-free trades, which put a lot of pressure on the industry to give brokerage-free trades to everyone else. This is nice because it means more people can participate in the market. Robinhood IPO'd, I believe, a little bit over a year ago, 2 years ago today, and their financials and user activity has just been downtrending ever since. So it's a very interesting use case to look at. One thing I really like, actually, Daniel, is you and I really appreciate companies that are forthcoming in their financial performance. Robinhood is pretty clear. Just not even talk about what their numbers are, just how are they presented. Not only are their earnings presentations put together in a very nice to read way, they also have these monthly metric reports, which I don't think they have to do. They just do it. And let me know if you can read this, if it's too small.
It's a little bit small.
All right, we'll try to bring it up. But yeah, what do you think about companies that do that for like report more than they have to?
I mean, I like when the reports are very clear and they're not like trying to mislead investors or try to make their numbers like when they're hand picking numbers like Snapchat does. That's kind of a red flag for me.
Yeah, for those of you who aren't aware, we uncovered how Snapchat is being a little markety with their language around their share price increases or decreases. So that was not fun
Yeah,
to see.
their shares outstanding. They just they don't like to show you what the stock based compensation is doing there. So
Anyway, so for these monthly metrics, it's actually really cool. So Robinhood will put out their user growth numbers, engagements, the amount of assets they have. So again, you need to remember people that interact with Robinhood as customers. They have trading accounts, they put money into them, they execute trades. That is largely how Robinhood makes their money. So what we are seeing here is the numbers they are outputting month over month. So the latest numbers are here on the right. This top row is user growth, and this is a million. So you could see for monthly active users, about a year ago, 22.7 million. And it's been pretty flat. They hit 23 and have actually sustained that level. So not really much growth there. And we'll see later in the numbers that these are actually downtrending year over year as well from their peak. So anything interesting you want to talk about here, Daniel? If not, we can go through the rest of their report. But I just wanted to let everyone know that they do have these monthly metric reports. So, they're kind of showing stagnant growth, which
yeah,
great, but it's nice that they have it out there.
yeah. One thing, like if your users are not growing, then basically for your business to grow at that point, you need to generate more revenue from every user you have. So if their users are not growing, then basically you have to ask like, is that going to change in the future, or how are they going to continue sucking more money out of their existing users? Because that's like where the
Exactly.
growth is going to come from. And I don't like a business where it's like, okay, we're not growing our users anymore. So now it's just like, how much can we milk our existing ones? I don't think that's a good spot for a business to be in personally.
Yeah. We all know that during COVID, everyone started trading, especially during crypto. And it is really interesting to see companies like Robinhood that rode that wave, had a ton of what I would like to call like investing tourists. basically a lot of people came to the market. They tried trading out. They didn't really know what was happening. And a lot of those people then left. So yeah, the
Yes.
people that are left on Robinhood, I guess, are the diehards, but their numbers have been down a lot.
Yeah.
Another thing that's been big in the news is stock-based compensation. So we know this
Yes.
is really big to look at. There was two very interesting things I saw there. One was, holy crap, they've been doing a lot of stock-based compensation. And Daniel, I think you'd find this interesting. The CEO made an announcement that they are canceling nearly $500 million of their share-based compensation program to ensure that the company has as much resources as possible to deliver value. So that was very interesting for me to see, because this is a company that, again, is not profitable. They're losing money. They have a very large cash position. And we've seen a lot of other companies, especially the Cathie Wood stocks, just give more and more stock-based compensation. So I actually saw this as a good thing.
I mean, it sounds like a step in the right direction, but I'm not sold yet.
Well, another thing I want to get your opinion on is valuations do matter. Robinhood is trading at about 8.5 billion. This company's cash position is $6 billion right now.
Okay,
So,
but
go on.
is it? I would need to look at their report, but like, do they report like a bank essentially, where it's like, okay, we have $6 billion in cash, but 5 billion of that is our customers' cash.
No, like they have 6 billion of cash, and then I think like the deposits and customer stuff on top of that is an additional like 3. So we're actually talking like cash or cash equivalents like available for the company to use, as I understood it from their report.
Interesting. Yeah. I mean, I've talked about this before. It's interesting when you like think about buying businesses at cash value or book value when they're burning cash. I don't know what Robinhood's burn rate is like right now, but a company like BYND, for example, Beyond Meat, at one point they had like 1 point something billion on their balance sheet, and it was like, okay, well, do you want to buy that business at its cash value? My opinion was no, because if they got 1.3 billion in cash, but they're losing, 100 million a quarter, then it's like, is it actually worth the cash value? Because over time, it's just going to continue declining. So I don't know. There's some businesses where like I straight up don't even think they're worth the cash that they have on the balance sheet. I don't know if Robinhood is one of those, but yeah, I wouldn't buy a business just because it's like, they have a ton of cash if they're losing a lot of money.
I agree 100%. And this one's interesting. So their net loss was 166 million on the quarter. If we do a little bit of math on that and annualize it, that would be 664 million in a year. That's well under their cash position. So their run rate in terms of how long can they, quote, sustain this with the cash they have in the bank and their burn, the answer is years. But to give credit to what you're saying, Daniel, you don't want to pay for a sinking ship. It's just really interesting to me because it does seem that they're bottoming out in terms of where their activity is at, when we were at around that 23 monthly active users. And that's still a lot of people, even though it is, down from their boom. Their revenues are slowly going up. You can still see that people are trading less and less. This is what I wanted you to see, Daniel. So one thing that got you and I a little, dare I say, frustrated last time, even though we try to view these with an open mind, is how Robinhood makes money. So obviously, as the founders and executives of Stock Unlock, we really value investment education, people being given the tools they need to make informed long-term decisions, as opposed to being incentivized on transaction frequency and things like that. Since when people trade more and take out more margin and options, statistically, you lose more. You can see that the only thing that is going up for them, even though their numbers are still flat, is their margin interest over time, which is the amount of money they are making from people who take out margin. I'm not sure if you want to comment on any of these other line items here, but it kind of nicely lays out what is contributing to that 167 of revenue, broken down by each revenue stream on their software products.
Yeah, I mean, they incentivize people to take on margin, essentially. Like, Robinhood makes money, they profit off of people taking on a lot of margin. And yeah, I don't like that.
So I'll give like the two opinions. I do think it is nice that people have access to markets. It is really good to like democratize ability to have access to these trading instruments that typically were only available to the 1% or the rich. However, if you do that and don't couple it with the tools you actually need to use so successfully, it will sadly cause a lot of people to lose money. Of course, we hear all those sad stories of the Wall Street Bets crew and people like that don't really understand what leverage is and somehow end up with a huge hole and, kind of
Yeah,
messing their life up in some cases.
and Robinhood basically gamified investing. Like I was hearing stories about like when you would buy a stock, they would like show you confetti, and it was like they would get a dopamine rush whenever you like bought a stock or did something like that. So it's like, I don't know, they kind of turned investing into a little bit of a game/casino, in my opinion.
Yep. And also with like cash sweeps, I'm not sure if people know what this is, but with large amounts of money, you can like move it around to like interest bearing accounts and make some money off of that. A little bit of financial engineering, and that has been going up in a higher interest rate environment as well. So, not that interest rates will stay high forever, but for companies that do hold a lot of cash and customer deposits, you are able to pull some strings there, bring in some more revenue. So, again, kind of flat-ish, but it is interesting to see that more and more of their revenue percent is coming from that margin interest. I just really hope that their customers aren't getting burned. Obviously, there's no numbers here to show like are people on Robinhood making or losing money, but I'd be interested to see that. Anyways, going through some fun stats here, we start looking at the average revenue per user numbers and stuff, which we'll get to down here. Just to let you know that those graphs are coming. But
yeah, let's take a look at the graphs.
Awesome. So
right here,
the average revenue per user one here.
Yeah, so now you can see like as of Q1 2022, they're trying to get their average revenue per user up because their users are essentially not growing. If you go up to the chart above, monthly active users declined to 11.4 million. So monthly active users are down probably like 70 to 80% year over year. Not great to see. Are there any more charts?
Yeah, I think I might want to do a small correction. Okay, user growth. Yeah, sorry. I said that it was 23 monthly active, but that was wrong. That was actually the net funded account. So apologies there. Did you hear about their $57 million mistake?
No.
So there's a one-time processing charge which hits their numbers, and this one's a doozy. This was in the news actually. So there was an error processing a stock split for the stock COSM. They were handling a 1-for-25 reverse stock split, and the error allowed their customers to be able to execute more shares than they held, which caused a temporary short position, which Robinhood covered out of their corporate cash. So this is a mishap by the company. Obviously, mistakes happen, but this was a $57 million mistake. So as a company's losing money, just not something you really like to see. What does this make you think?
I mean, I'm glad they fixed the issue, but it kind of sounds a little bit like amateur hour over there.
Yeah, I'm not going to pretend that I know what it's like to run or operate a brokerage, but I've just never heard anything like this before. So
yeah, I mean, yeah, you're basically allowing people to sell more shares than they own, which enters a short position, which is not good. Like someone could fat finger something, and then all of a sudden they have a 10x short position on a stock.
So put yourself in the customer's shoes, Daniel. Before the split, you bought this stock. You thought it was going to the moon. Maybe you did it on margin because Robinhood makes it easy to do that. You buy 100 shares. You wake up the next day. You have 2,500 shares and the ability to sell all of them. And the price is also 25x higher-ish relative because the stock split. So it looked like people just started liquidating the crap out of that because they knew that they didn't have it. And it seems like Robinhood just was kind of like, oh, crap, our bad. Like, you shouldn't have actually been given the ability to sell all those stocks. Yeah, just something you hope you never see again. But as someone, who's looking at this $8.5 billion company with $6 billion in cash, I'm like, I'm trying to find more things to make me take a gamble and like just swing trade it with an amount of money I'm okay with losing. But stuff like this just kind of makes me stay at water's edge, honestly.
Yeah, agreed.
So one thing I really do like about Robinhood is they are very quick to deliver products, and you could argue about what they release. Here's a quick visual just in the past year. Each one of these circles is a product, and we will not go through all these, but you can find them on their earnings report. So they're doing a lot around crypto. They actually had a really awesome 1% IRA match on a Robinhood retirement account. I actually thought that was like a really great feature. And one thing I wanted to call out is they are building on the success of Robinhood Snacks, and formed Sherwood Media LLC. So they are officially making it very clear that they are making a move to go more into the news and media space. I did not like this. I think news and media are very low margin and good for awareness, but I am seeing these pop up more and more. I just didn't really expect Robinhood to take a real corporate plunge into doing this, with their corporate dollars. So you can expect to see some Robinhood news and media programming coming to a TV near you.
Yeah, that's interesting. Definitely not what I would be expecting from them. I
Yeah.
did not know they were doing that. That's yeah, okay.
It's interesting. Up here is the Robinhood retirement thing I brought up. And again, I actually think this is great. I don't know the details about how you get this because I'm used to getting it through an employer, but a 1% match sounds good. I'm just not used to hearing about that behavior from anyone who isn't your employer. Anyways, I don't have anything else, Daniel, on the bulleted list. If you want, we could look at their cash flows a bit, or we can head over to the chat. I feel you can run tempo.
Yeah, let's head over to the chat.
All right, and there you go. Robinhood investor relations page if you want to go look at some of this information yourself.
Yeah, so basically my number one concern with Robinhood is just like their growth is basically coming from them getting more and more revenue out of every single user that they have, not their users actually growing, and like their monthly active users is dropping 70% year over year. So overall, I'm not excited. I'm not sold on that business yet at all.
Yeah, I'm going to be honest. If the numbers were really, really bottoming with the amount of cash they have and me actually trusting leadership, it makes me get.
Like, why do you trust the leadership there? Like,
I actually like Vlad. So what a lot of people
don't get stock-based compensation they did when they IPO'd. It was like 1 point something billion. They diluted the crap out of people. I don't know if I trust those people.
I'm going to take the other side on this just for, the sake of discussion here.
Okay.
This company could not have been more bubble timed in terms of not only did they IPO during the stock market bubble and things like that, the inception on top of that is they are literally the access to the stock market and part of what propelled all these users and consumers to have easier access to the market. Money was flowing freely. Fed interest rates were at zero. This is someone who had been starting this company since early 2010s, and their mission statement on their company is they wanted to democratize access to financial data and markets. So that is a very noble mission. I think they've actually positively applied a lot of pressure on these industries to lower rates. And relative from his shoes at the time, he has a board of investors and people working there. They all want to get rich. The board of investors wants the company to be as big as possible. And based on how their numbers were trending, it looked like they were going to be at 50, 100 million active users in a few years. And based on how their revenues work, they were literally thinking that they were going to be a $50 billion company. Now, if you do grow like that, I think it is arguable that for the people working there, you can give them good comp. As we all know, that bubble kind of popped. I think what's happening now is he got a little drunk with the board and on the free finances, things were flowing. Got a little bit crazy. They were doing too much stock comp. Things turned way quicker and harder than they thought. Yes, he made mistakes. Yes, they did a little bit too much comp, all of that. However, he is doing everything he can right now to turn that around. He canceled $500 million stock compensation.
What about changes? What about when the company stopped letting retail buy certain stocks and you could only sell your position? And they basically cut off. And they basically cut off, said, hey, we're going to start protecting you guys by not letting you buy stocks. But if you have a position, you can only sell it now, which basically created only sell side pressure on certain stocks, which is super sketch to me. Not trustworthy at all. Not something I'd be comfortable getting involved with.
There would be a lot that you'd have to forgive. Anyways, to be clear, I'm not taking any position in this stock. I'm just saying the valuation according to its cash and them turning it around, there is some turnaround play here. Probably not for me. If I had to pick a side, I get it. I agree with a lot of what you're saying, but I think it's a little bit more complicated than that. I don't see Robinhood disappearing. They have, over tens of millions of users. Well, we'll see what happens with this one.
Yeah. Yeah. I don't think they're going to disappear, but I don't think it fits in my great business box. It's got a long way to go before it fits in that box.
Fair enough. Yeah, it has a 2.62 score on Stock and Lock. I do not believe that we have the gap standardized financials yet, so that will update when it shows that they're still losing money.
Yeah. Robinhood's always an interesting one. I feel like every time we talk about it, also, it's like,
you get triggered by the consumer investing behavior of people taking out tons of margin
yeah,
and
I do.
leveraging up.
And I get triggered by Robinhood promoting that and like incentivizing it basically and like making people take on more risk than they know they're taking on, which ultimately led to a lot of bad financial decisions that people didn't know they were actually making, which caused a lot of people to lose a ton of money, sometimes their entire life savings. Also, Robinhood could make some money. Like that's the way I see it. So that's what I mean. That company has a lot of work to do before I would even have an ounce of trust.
All right, well, there you have it.
Yeah.
Robinhood earnings
Anyways,
analyzed.
I'm glad they made free trades though. They definitely put pressure on people. So like they did do something good for the sector. But yeah, that's
Look,
that's
it's easy to dunk on them, but I'm just saying I think there's a little bit more to this story that we'll see unwind in the next few years.
we'll
Yeah,
see.
it looks like you got a stock up here from a Affy Gorilla, Eighth Gorilla.
Yeah, so we've been asked about um Fiverr. All right. Fiverr earnings. So I have not taken a look at Fiverr's earnings. However, I will share my screen now. Amazing. And
It
let's
is
take
being shared.
perfect. So let's take a look quick. This company has a 2.5 insight score right here out of 5. That's not the best. It looks like it ran huge in 2020. It was up over 1,000%, and now it is down 86%. $1.48 billion company now. This is the company I believe where like you can go on it and hire people to do things, right? Like you can pay people to like make you a logo or some sort of service like that.
Yeah, it's like a gig economy marketplace.
Yeah.
And I feel like I see
So
these stock charts every week when we look at stocks now, Daniel. Like the boom during COVID, just like a big mountain that collapses.
yeah. So I mean, when everyone was working from home, it looks like Fiverr did see, a tailwind from that. It looks like the revenue is kind of topping out now. If you go to the trailing 12 months and show their revenue growth, their growth rate is definitely slowing down in the trailing 12 months. So it looks like things overall are slowing down in terms of revenue. But then if we go to cash flow is starting to come down in the trailing 12 months. But if you take a look at quarterly, it's been basically coming down for like 6 quarters now. So basically, revenue is going up, but cash flow is going down, which means that their operating cash flow margin quarterly is going down quite significantly as well. Went from about 13% down to 7, so almost cut in half. What is their free cash flow doing? Let me take a look here. They're issuing common stock. That could be from stock-based compensation. It doesn't cost them a lot, so they are free cash flow positive. It's good to see.
How much free cash flow? I see
Not a
they're trading
lot.
at 57. Okay.
Yeah, price to free cash flow 57, which means a free cash flow yield of 1.74. So what do our insights say? Like what else is going on here?
Well,
Grew
because it looks like
revenue.
it's not growing and still kind of expensive.
Yeah, like it has a decent balance sheet. Analysts are apparently bullish on it. Growth is not good. Again, you can see the revenue is growing, but operating income going down, net income going down, operating cash flow going down, free cash flow decreasing, book value decreasing. So revenue is going up, but then like every other profitability metric's going down. Gross margin is 80%, but operating margin negative, net margin negative, unprofitable. So profitability is low. They're not investing money well. And their risk premium right here in our valuation is not good because basically, yeah, the stock is down 86%, but the free cash flow yield is still 1.74%. And I believe bonds right now are offering like 4%. So this company, I mean, you could go buy a bond and get a way better yield on your money. So I think it's risky. I don't love that valuation. I don't like that the profits are not growing with revenue and that the revenue growth is really slowing down.
Yeah.
So,
One thing that I think is important to talk about with Fiverr is, does this company have a moat? In my opinion, this company does not have a moat. There's also companies like TaskRabbit So a marketplace to connect gig economy workers, I don't believe is a defensible business model. On top of that, the customers of this business model, who are people who are working for themselves, typically use these things to generate leads and get in contact with people. But there is no incentive, in my opinion, for the customers who are the people working and doing the gig economy stuff to keep working through Fiverr or through TaskRabbit. There's fees associated with that. Like, you're adding a middle layer of bureaucracy to connect, which sure is good for the connection, but then the person who's valuing from that transaction, who's the person giving the work, they are not incentivized to stay on these platforms. They want to go off platform and start booking it themselves, because then they get more of the pie. That is a huge issue I see with these. I think we see it in the numbers. So they're being attacked from their consumers not wanting to stay, and there being a lack of moat and other companies doing the exact same thing, battle to the bottom. And while it's trading at like a over 50 price of free cash flow, it's not growing. So no from me, dog.
Yeah, exactly. There's just I'm gonna throw that one in my not great business bin, at least from like the quick analysis we did there.
I'm imagining your like not great business bin is this like thing overflowing with like papers and stuff, and then in the other bin there's just one post-it note on the bottom, and you look in and it says, "Bam."
You got BAM, you got Google, yeah, but BAM's. I've liked BAM for a minute. Okay, Stock Auto. Hello, Stock Auto. We need to respond to Stock Auto's email soon. Hi guys, can you check Floor and Decor Holdings? I think you will like it. F&D. This is Floor and Decor. Insight score 3.17. Looks like they IPO'd in 2017. Looks like 150% gain since then. I believe that's outperforming the SPY then. Yes, outperforming
Finally,
the SPY.
not one of those graphs that's just like a mountain. I mean, kind of.
Yeah. Yeah, so this is a retail company. It looks like the revenue's been growing consistently every year. That's good to see. Floor and Decor engages in the retail of hard surface flooring and related accessories. The company is headquartered in Atlanta. So it sounds like basically over the past few years with low interest rates, I think, well, anecdotally, I've seen a lot of people do like home renovations and whatnot. So if this company is basically supplying home renovations, let's just say, then when money was cheap, I think a lot of people probably renovated their homes. This company probably saw its fundamentals go up from that. I don't know. So yes.
I feel like we had a similar conversation when we were looking at Home Depot.
Yeah, it's like
similar consumer trends of, people did those projects during COVID, and now like a lot of these businesses are seeing revenue tailwinds from the lack of spending, specifically though for those types of projects.
Yeah, like their revenue is actually still growing decently.
I read a book this week actually from the old CEO of Home Depot. It was a really good one called "Kicking Up Dust," and I can share it at the end of the stream. But the company itself, I know we're digressing, but the Home Depot company actually has a really awesome background story. Anyways.
Also, Home Depot, apparently Peter Lynch bought Home Depot stock when they had like 4 stores. And then he sold it because I think he made, I'm going to butcher the story, by the way, so we definitely need to fact check me here. But it was something like he made 5x his money on the stock, so he sold it. And then the stock went on to 200x or something like that from where he sold it. He was like, his number one mistake, he said, in his investing career was always selling great stocks too early.
I'm trying to look it up, but I can't find it.
Yeah, it was like a crazy story. Basically, he would have more than 100x'd his money, and like he took a quick gain on Home Depot. And like he was one of the first investors, it sounded like. It was crazy. Anyways, this stock definitely giving me some Home Depot vibes. Cash from operating activities over the past 4 quarters has been basically non-existent. And in the trailing 12 months, you can see their operating cash flow has declined from 566 million all the way down to negative 56 million. So their operating cash flow is declining significantly. I would want to know why that is, especially when like revenue's going up, because what that means is the operating cash flow margin has just completely collapsed from about 19% down to negative 1.3%. And that's a significant drop. So I would want to know why that's happening.
It's possible that they're investing in growth potentially.
Yeah, but usually when you're investing in growth, it's your capex. So that's like after investments. That's after operating cash flow. So that means that their free cash flow right now is really taking a dive, and it is.
Hmm.
So it went from positive 300 million to negative 500 million. So it dropped by 800 million over the past 15 months. So yeah, I would want to know why that's happening. I would definitely need that answered before I would like take a serious look into this
Yeah, I mean,
one.
it's so weird. Like it almost seems like things were going well, the plane was going straight, and then someone just took the controls and just started nosediving it.
Yeah.
But to what you're saying though, there's likely a reason for it. It's just not clear yet why.
Yeah, like you would have to read their SEC filings and figure that out, but like that right there, just like at a quick glance, is like I would 100% want that answered.
Hmm.
So yeah, I don't know. Revenue's going up, but I would want to know what's going on with the cash flow there for sure. Also, Jake, did you have a time or chance to look at Alibaba's earnings?
I unfortunately did not, but what I did have time to do was release the total portfolio returns graph in Stock and Lock yesterday, which is where my time has been spent. So, for you Stock and Lock users, we heard you. We added that, so you can go check it out and actually see your true gains losses on open close positions over time, as opposed to the value of your open unrealized positions over time, which is useful but not the full picture. Uh,
Yeah. So you did not. Okay.
did you?
And you
Did
were
you?
I did briefly, and Alibaba, I think they generated something like $12 billion in free cash flow for the quarter. Revenue was up 2% year over year, despite everything going on in China. And like, I'm pretty sure they smashed earnings. So I also think they bought back like $3.3 billion worth of shares. So I don't know. I thought it was like really good performance, honestly. They said that they were going to focus on getting cash flow back. They got cash flow back. And again, in one quarter, they generated like 12 billion in free cash flow.
Yeah. So
It was pretty
I am
impressive.
a. What's up?
It was just pretty impressive.
Yeah, I think you are too. I am a Baba bag holder. I think I probably down like 30 or 40% on it. It's not a huge position in my portfolio, but I've been holding that for a bit, kind of like bought it on the way down. One thing I didn't like about their last report, because we did talk about their last report a few months ago, was I wanted to see their cloud segment grow. And what we saw was I think it only grew like 4%. And then later on the report, they claimed like 2%, or sorry, two of those 4 percentage points. So half of that growth actually came internally from Baba. They were losing international customers, and it kind of fit this narrative where if there's multiple cloud service providers out there, including Amazon, Google, Microsoft, why would you use a cloud service provider that runs within a country where the CCP controls the companies? And that was unfortunately playing out there. So I don't know what they reported this quarter, but I would be really curious to see what their cloud growth was, if anything, because that's a trend I would really want to see reversed. I think that is a huge growth driver for them, in addition to them obviously being the marketplace provider for China, similar to how Amazon kind of grew out that way in the US for just going online and buying things.
Yeah, basically the outcome of our conversation last time was like Alibaba's cloud is a play on China's cloud. Because if you're like a global company, like if you're in Italy for like let's just pick Italy for no random reason at all. Um, if you're a company operating in Italy and you're looking at Azure, AWS, Google Cloud, or Alibaba, you're probably not going to choose Alibaba. Like with those other options out there, it's like, yeah. So I think Alibaba Cloud is probably a play on China's cloud growth at this point, which is going to be slower. But overall, the company did report some pretty solid numbers. And I'm in Cambodia right now. And recently we were in Vietnam. And I have seen Alibaba's logistics companies like delivering things all over the cities here, which is very interesting to see.
Yeah, I know the company
So,
did a lot of investments in Asia specifically. Like it wasn't just a China play. I
yeah.
also read that they had to like divest out of some investments that they made in India due to like tensions between the two countries. So it's just a little bit hard for me to follow. But Yeah, no,
Yeah, Asia's
they're international.
Asia's an interesting place, man.
There's also
It's
Alipay, right? I know that that's huge. Numbers were interesting to track as well. It is funny how many mirrors back and forth there are from tech companies in Western Hemisphere and also Baba. I feel like they all got their wallet, they got their web computing services, then like they got the marketplace, or at least in Amazon's position. So it is kind of funny to like see that play out in similar ways, but just like kind of mirrored patterns.
yeah. Yeah, it's definitely interesting. Also, side note, I've been like paying attention here in Southeast Asia, just like how much growth there is, and it's pretty insane.
What type of
For
growth?
just like overall economic growth. For example, we hired a driver today to like take us a few places in Cambodia, and he was saying that all of the skyscrapers that you could see like all over Phnom Penh, which is the capital here, have been built within the last 10 years. And there's a lot. And then there's also like within eyeshot, I was counting like 7 to 10 new skyscrapers going up and like so much growth just happening over here. So then I looked up Cambodia's GDP growth rate, and historically it's been anywhere from 7 to 15% per year. It's just like wild how much things are growing over here, and it's the same with Vietnam. Like we were in Da Nang and Nha Trang, which are kind of beachy towns, beachy cities, and there was just like skyscrapers popping up all over the place along the coast, like along the beaches. It was like every piece of land was either already a skyscraper or like a new hotel being built. I was just like, dang, dude. Yeah, there is money pouring into these economies. Like there was the most construction I've ever seen in a city over here.
That's exciting.
Yeah, it's wild, man.
I know we went through Y Combinator and there's tons of startups going through there, and the amount of startups in especially Southern Asia region, even talk about like Indonesia, were huge. And my mind was blown when you talk about the cost of labor. So when I go out to hire a software engineer or someone, you're either looking at like 1099 contractors or W-2 employees. Salaries will start at about 100K on the super low end and obviously go upwards of 200K plus. You are able to hire a like team of software engineers out there for almost pennies on the dollar relative to the cost here. So I think the people I was talking to were paying a couple $1,000s a month for a team of 6 to 7 software engineers. You could pay a couple $1,000s a month here, and maybe if you're lucky, get one contract engineer. So cost of labor out there is low. Birth rates are obviously going up. We know that feeds into the economy, and some of these populations are starting to mature. They are obviously at earlier points than the US was, flashback 40, 50 years ago. So yeah, investor dollars are flowing in there. We saw it through Y
Yeah.
Combinator. Cost to build a business down there is low. So tell us where
Yeah,
those investing opportunities are. Like, what is the best company right now in Cambodia to invest in, Daniel? From
I
what
don't
you're seeing,
know.
you're on the
I've
floor.
been
You're doing direct research.
I know I've been paying attention to like what companies are out here. So Manulife is a Canadian insurance company. They are working with Vietnam, and they're like one of the largest insurers in Vietnam now. So they're exposed to that growth. Also, a Canadian bank called National Bank, and full disclosure, I bought some shares yesterday of it. They have a subsidiary here in Cambodia called ADA Bank. So I went and I took a look at National Bank's report, and I just like control F to Cambodia in the report, and you can find like the performance of ADA Bank here in Cambodia, and it's growing profits 30% year over year on $250 million in annual net income. So I was thinking about it, and I was like, okay, if 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 I'm looking at a business, like let's take that subsidiary on its own. You got $250 million in net income growing at 30% per year. Like, how much is that business worth most likely? I would say at least 20 times earnings. I'd be happy to pay that. So that would be at least a $5 billion market cap for that bank. And this is in a country that's growing GDP, 7 to 15% per year and like just getting started, in my opinion. So I was like, this subsidiary of National Bank, I could see over the next 15 to 20 years probably being worth the entire market cap of the company, National Bank today. And like National Bank is also this like smaller Canadian bank. I know you don't like banks very much, but I do. So it's just like,
I'm neutral. I'm neutral on them. I don't like. Yeah, I'm not like a bank hater or anything. That's exciting though. Is that a new position for you?
yeah, I've started. It's very small so far, but I liked what I saw, man. I like that the company's focusing on emerging markets like this. It's exactly what I would be doing if I had the capital. Like, if I owned a bank, and you're in these more mature markets like the United States and Canada. It's like we need to go where the growth is, and right now the growth in the world is Southeast Asia. So they're doing that. They're now in Cambodia and looking around over there. So I was like, +1 for management for me. Like, that's exactly what I would be doing.
Yeah. Do you think it could be worth it to bring this stock up on Stock Unlock? And we can take a deeper look.
Uh, yes. Let me share. I believe it's na.to.
Also, while you're bringing that up, we do love interacting with the chat. We are equal opportunity comment readers, so I'll read this one quick. Someone said 15 minutes on Robinhood. Come on, guys. Fair. Let us know a bit more about what you think. We love feedback there, but there was a lot of interesting things in that report, so we'd love to hear a little bit more.
Okay, so this bank here has insight score 4.17. If we take a look at the total returns versus the S&P 500, it's massively outperformed since, what is this, the year 2000? It's up, including dividends, 1,300%, 1,300% versus the SPY's 186%. Looks like those returns it looks like it's consistently outperforming depending on the time frame. But yeah, it's a nice dividend paying stock. 5-year compounded annual growth rate to the dividend is about 10%.
Oh, nice.
Also, yeah, like you can see the dividends just like grow and grow and grow and grow.
Yeah, this is my favorite stat right here, the dividend yield on cost. Because this to me is how dividend investors should think, right? Like, it doesn't matter what your yield is today. It's like, what is your yield on cost? And I feel like people won't talk about that enough.
Yeah, so if you bought the stock in 2000, then you'd have a yield on cost right now of 44%-ish. Even 10 years ago, if you bought it in 2012, you'd now have a 10% yield on cost, which is like pretty freaking good. So as the net income grows, they return that net income to shareholders through increasing the dividend. And I don't know, man, like it's been a solid bank in my opinion. It's been very, very solid.
Sweet.
Revenue's been growing.
You like the management and everything as well?
Yeah, so I only have a small position because I haven't like actually fully looked into the management and everything yet. So when I say small, I mean like less than 1% so far. But I like that the management is looking into emerging markets in Southeast Asia. And I mean, I was reading about the ADA Bank subsidiary, and they're all over Cambodia. Like, we use them tonight to pay for dinner, basically. Well, we didn't use them. We actually used cash, but that was the bank.
You're also using Airbnb.
Yeah, anyways.
Someone did say, let me find this comment. So you were talking about all the buildings going up in Cambodia a few minutes ago, but those buildings are often Airbnbs or hotels. So as businesses or as cities are expanding, there's more places to visit, more places to go, more buildings coming up. What companies are going to benefit from that? You know what my answer would be, but
yeah, potentially. We'll see.
Yeah, and I think we got time for about one more. This is going to be a slightly quicker stream than normal. Might actually make a record. Normally we go for over an hour, but conflicting schedules today had other ideas. So we have about 5 minutes left. I'm not sure if you want to take one more stock here from the chat, Daniel, or if there's any other secret stocks that you were looking at that you might have started a position in this week. I don't have anything that exciting to share, but I thought that was cool. Mr. Bank himself, Daniel, Sir Pronk.
Simon says, Couche-Tard, this is another Canadian. I think they're also on the U.S. exchanges, but they're basically a convenience store network and chain, and Circle K is their brand, and Circle K is also over here in Southeast Asia. So this person's basically just saying that's another one that has exposure over here. I'm gonna try and take a look for one. I saw an interesting comment up here that I think we should talk about. Don't know where it went though.
Well, Have you ever looked at MetaFast? They have almost a 10% free cash flow yield.
I have not, but here was a comment. What you guys think about the search market share Google can loss versus the gain in cloud market and hardware? I actually don't know if I fully understand that.
It's I would think it's like balancing their revenue stream. So if they're losing market share in search, could they gain that back in other areas of their business?
Yeah, so you know what? Here, I'm going to share my screen really quick.
Also, I hate saying this because now you're always going to think about it, and maybe I do this too, but I love the announcement of screen sharing. It's like very specific. I am going to share my screen.
Yes, I
I'm
am
going to
going
share
to share
screen
my screen
sharing.
now.
Some people made fun of millennials for that too. Like apparently when we take out like the camera to film ourselves, there's like a pause for us to like make sure it's on. And apparently like Gen Z is not doing that. And it's some like weird way to tell like when someone was born. Obviously like a little bit gossipy, but I thought there was like some truth to that. Because like when we used to take it out, you had to make sure like, oh, is this on? Like, okay, we're going. And that's how like every single one of our live streams starts.
Yeah, pretty much. So, what I have been doing is I've been paying attention to the Google trends of just the Google platform. And I've been seeing if like Google is actually going to start losing interest over time, with all these like Chat GBT and Bing discussions going on. And Google's interest overall right now is 91 versus last year at the same time it was about 88. So year over year, like nothing has really changed. Let's take a look at the past 5 years. I mean, it looks pretty dang consistent. I don't really see anything. I don't really see any dropping in Google's interest over time in these charts, at least. So I think people are still using Google. I'm not sold yet that Bing is going to dethrone Google or take significant market share.
I have some opinions on this. Like, if we're talking about advertising in general, I mean, a lot of Google's business and what they've built a massive $1 trillion company on is their ads. It's not just Microsoft coming in with search, right? Like Amazon's ad business has been exploding. Apple's ad business has been growing. There's also been a lot of other smaller players coming in for ads. So I do see Google facing a lot more competition there. And maybe it's indirect to compare to their search dominance, but what search dominance means to me is ads dominance. Like they are directly tied, but like one leads to the other. What I focus on with Google in that respect of, okay, if they're not going to have as much revenue from ads, where is this business going to grow? In my mind, it's cloud compute, AI, and YouTube. Like the revenue that they're getting from YouTube and creators like Mr. Beast and everyone doubling down and building businesses on YouTube is crazy. It's one of the reasons why I like Airbnb is when you can create your own economy around a product, it is sicky. Like people have their livelihoods and literally their entire career is built on top of YouTube and that ad sharing scheme. YouTube Shorts is becoming big. They're doing a 50-50 splits with creators there. Just like with Airbnb, people use in a similar manner, either for side income or actually just being hosts as their main job. I continually see people put in more of their time, effort, and human hours like into these apps and platforms. Not to mention that their cloud compute infrastructure layer is also being used on the B2B side to build more of these applications as well. So even for people building the new stuff that will compete with it, they're still paying for the underlying layer that powers that, which is their cloud. Sure, they can go to Azure or Amazon, but anyways, that's how I think about their overall piece of the pie. If that's what this question is getting at, like, sure, like things are shifting around as to like their market share in search and ads. I think that there's a lot of other pieces of the pie that are moving around quickly too that people need to remember.
Yeah, I'd agree. We'll see. We'll just see.
Yeah. All right, Daniel. Any last words? I know it is getting late for you there. Even just a fun plan for tomorrow. I can't tell if that's an elephant shirt or not, but I'm keeping that going every stream. All right. You've disappointed me the last two streams. I want an elephant shirt.
My elephant shirts have shrunk. So, yeah, they're pretty low quality. I mean, you buy them for like $3 and then you wash them and then they shrink and then they don't fit anymore. So that's the story. I'm pretty sad about it.
I was trying to find a dad joke and like my elephant shirt shrunk or like my elephant shirt trunk.
Lol.
Yeah, good time to
No,
end.
we're flying to Siem Reap tomorrow. We're leaving for Phnom Penh. It's about a 45-minute flight. We're going to be in Cambodia for about another 4 days, and then we're back in Thailand.
Awesome. Well, maybe we'll see you in Thailand next week. For everyone tuning in, we really appreciate everyone being here. We do our best to go live every week. Daniel has been in Asia for the past month or two, so our schedule's been a bit choppy. But again, typically every Saturday, you can join our Stock Unlock Discord to get notified when we are going live. We record the events there. It is totally free. And of course, we are the co-founders of Stock Unlock. So if you haven't checked out stockunlock.com yet, build a ton of investment education and analysis tools. You can go get your free trial. And we are super nerdy about investing, all about talking about earnings reports, learning how stocks work, and just failing and growing together. Really appreciate everyone coming out every week. And I just dropped a link to the Discord if you want to join. So that's it.
Perfect.
A smile and
Yeah.
wave, hit the button.
Yeah, everyone, if you want to know when we're going to live stream it next, as Jake said, join the Discord and we'll send out a notification. So, yeah.
Till next
All
time.
right.
I'm going to
Goodbye,
hit
everyone.
the button.